says that we're preparing to live stream. I guess that means that it's live. Well, it's 10:30 a.m. on the West Coast, 1:30 p.m. on the East Coast, 3:30 a.m. Australian Eastern Standard Time. Probably, I got no idea. What's happening, fellas? We've missed a few. We're back.
We're back, only missed one, didn't we?
And then one before that.
Oh.
Yeah, it's been
Lose counts.
Been a little spotty lately.
People don't come here to depend on us.
Thank God.
And if they do, they've come to the wrong place.
So we got 2 out of the 3 of us out of our normal locations, huh?
Yes. I'm in an undisclosed location with crappy lighting. There we go. Now it's better.
Whoa. Yeah, where are you, Bill?
I'm in the middle of the U.S. Dead in the middle.
I am too, just about, except I'm a little further south than you are. I'm in Dallas at the moment, so.
Very secret squirrel. I'm where I always am.
Yeah. Toby's
not where you always are. Sometimes you're ringing the opening bell at the NYSE.
That's
true. How was that? Give us
fun.
the full story.
Yeah, that was cool. That's going to be my topic for today. So,
okay.
You went ham on holding that button. I like that.
Well, they tell you. So I did I rang the bell at the NYSE opening bell on Wednesday last week. That's part of having a listed thing there that I can't, for compliance reasons, I can't discuss. But
that's going to be 45 minutes worth of the show is just telling us.
That's so stupid that you can't like mention it on here.
You know, yeah, it is.
Meanwhile,
especially
Kathy
when
have
there's
50% GDP numbers.
Yeah, that's what
literally took the words out of my mouth.
Sorry.
Yeah, so I do want to come back to Kathy's. I wrote that down. I just saw somebody discussing it just then. Yeah, so it was fun. So as part of being listed, you get the opportunity to ring it, and we didn't get it when we first listed. And then, we've had 2 years of COVID, so we finally got full access. So I took the whole family, took the kids on the floor. It was cool. So you get a tour, a historical tour, and then get to walk on the floor of the NYSE, which is cool.
Yeah.
And then up into lots of photographs and up into the little balcony where you ring the bell. And the instructions are, you got to ring it for 10 seconds before the hour, and you got to hold it down all the way to the end. And it's bad luck if you take your finger off. And apparently you get some jeers from the floor if you do that. And so I managed to hold it down for the full 10 seconds.
That's why we have a bear market, because you couldn't push it for long enough.
That day was the worst drawdown on the New York Stock Exchange.
Nice.
Since like June 2020 or something like that.
Nice.
But the funny thing is that I think that's what value needs to outperform. So from my very selfish perspective, it was actually a pretty lucky bell ringing.
Yeah, you just barely tapped it once. You're like the cooler. Wasn't there a movie about that? The guy was just like, such bad luck. Bring him into the table.
Yeah, it was cool. It was fun. And then we did New York kind of touristy stuff, like went and took the kids to see Liberty and the Brooklyn Bridge and the Empire State Building. Got the special pass all the way to the very top of the Empire State Building. Did you know there's a secret floor above
Oh.
There's a tiny little, very executive floor right at the very top.
Who got you that?
Connections. Got a connection. Who got us the super fast pass.
Nice.
And then the Met and the Natural History Museum. So it was awesome. Had a great time.
Yeah, that's living the dream.
Now I just got to recover and pay for it all.
Yeah.
Well, when stocks go to zero, that'll be tough to do.
Is that what they're doing right now?
I mean, it's the only place that we can stop.
Nah, I mean, we haven't. We're like, are we 20%? We're 20% off. We're
going to zero.
I mean, there's a few things I'll buy if we go to zero. I'll be hoovering up the Googles if we go to zero.
I will have no money left.
Hoovering up
That's
the
actually
Amazons.
a lie. Yeah.
Cash is trash, though. Remember that.
That's right.
They always say that.
I mean, I still think that's kind of true-ish. Like the inflation running at whatever it is, close to 8. And what are you getting on your savings account? Like 1?
Well, you can get 2 something on treasuries, but tell you what, US dollar is not a bad asset lately.
You could get 3 on the 10-year, but then you got a little bit of
you got to take the duration.
Got a little bit of duration risk there.
Yeah. I don't know why you'd go out that far. I mean, I haven't looked the last time, but I don't know. 3 to 5 years seems to make sense to me, but 10's a little long.
Buffett's not going over like a year and a half.
Yeah, you wouldn't go out that far. Somebody, that's why it's backed up to 3. I don't know where it is now, but it was close to 3.
Got to lever it, get that good return when rates go down.
There you go.
What can go wrong?
You don't want to do that calculation about how much purchasing power you're getting chewed up every year if you're sitting in cash. I mean,
if you're purchasing stocks, you're gaining a lot of purchasing power.
There's nowhere to hide.
Yeah.
There's no good spot to be.
We need the Zoom curate checking account 3-way competition. Who's winning?
Yeah, well, that's not, bringing up old shit.
Did that calculation include all of the stuff that's been spun out of Curate?
I mean, Curate's down now. It just is.
Yeah.
But look, if I had foresaw China pursuing a COVID zero policy and, supply chains remaining shut for 2 years and inflation destroying purchasing power, then
but
like
other
clearly,
than that,
yeah,
it's a layup.
That's right. Like, and a huge fire at their biggest fulfillment facility and product shortages that hit Zulily. I mean, other than that, it's been a fantastic set of cards.
There have been a lot of fires at, have you seen this? Fires at food processing plants? It's a thing. If you Google it, I saw Rudy. Haven't seen. Rudy has been banned from Twitter.
Officially, fully banned?
Gone.
Or just temporary?
Oh, I think it's official this time. I think it's a full-time ban.
I am
too much criticism of the World Economic
Forum.
Forum.
Against that as a free speech advocate.
You're not allowed to criticize the World Economic Forum, just so you know. As particular when Davos is going on, they got to get Rudy away. Rudy and his whatever it was, 80,000 followers.
Wow. That's troubling to me from a societal standpoint.
Absolute joke.
You can't silence the jesters like that, right? That's how you relieve pressure in the system.
Evidently you can. Anyway, so he's moved over to Substack. So you got to hit Substack if you want to get Rudy. I get them emailed to me now. I get his tweets emailed to me once a day.
Hey, Rudy.
That's the way it goes.
Shout out.
What topics have we got today, gents? So we got Kathy Woods predicting. So I get now how she's going to do 30 to 50% a year. That's what the GDP is going to do.
GDP performance. That's just in line with GDP.
I need to read this tweet again so that I'm not, because
that won't take very long.
No, I read it the first time and I thought that she was saying 30 to 50% growth, but then I read it the second time and they said that it was like, I thought that I read that it was like 30 to 50% improvement on AI or something, which like reduced from 30 years out to 16 years out, which last I checked doesn't matter.
She
actually did say could accelerate a growth in GDP from 3 to 5% a year to 30 to 50%. Wow, that's pretty sweet.
The thesis
I'm down.
is
I mean, unless it's just like 30 to 50% inflation.
Ooh, she didn't say real.
No,
GDP.
she did not. That shit would suck.
How does
thesis is it took thousands of years for growth to increase from 0.03% to 0.3%.
Cool.
But only a few hundred years for it to increase from 0.3% to 3%.
So let's just keep drawing a straight line.
It checks out.
If you naively extrapolate this trend, you predict that growth will increase again from 3% to 30% within a few decades.
That's so dope. This is going to be great.
Dope or dopey?
No, it's going to be sweet.
Okay.
Growing 30 to 50% a year. I mean, that's going to be really cool. It's about what my waistline's working on.
The funny thing is, though, that hasn't it's all sort of slowed down materially since 2000, hasn't it? I thought 2000 was our top rate of GDP growth, and we've kind of slowed. We're slowing.
Yeah, I mean, I think that you're like using facts and stuff, which is kind of frowned upon.
We're just using what's happening. It could just be a pause. We could just be pausing, getting ready to ram.
Yeah, dude, 100%.
What does the world look like if it like 50% increase in GDP on a year-on-year basis?
Yeah, it's gonna be sweet because obviously it's all gonna be real.
I mean, that's one way to do it, I guess.
I mean, you want to know what you want to know what the world's going to look like? Let's see. The high GDP growth is 1942 at 19%. So
that was all tanks. Me see.
If I recall, 1942 was a great time to be alive.
Yeah, that was airplanes, tanks, bombs.
Yeah, fun.
That's not really where you want your GDP to go.
We're going to have real GDP growth when we go to war with China and Russia. It's going to be amazing.
Please no.
Hope not. All right. What topics have you got? What do you got, JT? You got some veggies?
I'm just going to go hide.
I do have some veggies for the road that I prepared, and it'll be on the London Tunnel, which is kind of a little bit of a randomness. But
the channel, the naming of the channel?
No, it's just a different thing than that.
I remember the naming of the Channel Tunnel. And I think they got paid like £1 million or £3 million or something like that. And it was, Channel Tunnel come up with a name for the Channel Tunnel, and they went, Channel, that'll be £3 million, thanks. So I want that job.
Yeah.
It's a pretty good one.
It's not a bad name.
No.
It's still not my favorite British naming story, though, with Bodie McBoatface taking
Bodie
number one.
McBoatface is the best, yeah. I agree. That was crowdsourced, wasn't it?
Yeah, and won by like a landslide. And then they took it away from us. They wouldn't let us have that.
Sounds pretty funny.
I don't know what I'm going to talk about. We got, there's
Walmart, a stock market crash going on. We can talk about that a little bit.
Walmart and Target's kind of interesting.
Yeah, what's going on in retail? It seems like it's been a retail Armageddon, apparently.
Yeah, well, I don't know. That seems like fake news to me. Look, I think if you pull up Target stock, I just don't know that we can pretend that this was like trading at some depressed valuation and then cratered.
Say it was a little frothy to begin with.
I don't know. I mean, I'm sure you could say it's fair, but I mean, I don't know. Just, it's not like we're at some hyper depressed earnings base and some hyper depressed multiple here.
Yeah, or margin or any of the variables that matter.
Yeah, so it's like, I don't know. It seems to me that call, now I'm doing it off memory and it's greater than a week and I ruined my brain this weekend. So please pardon me. But when I listened to that call, I heard an organization that is focused on all the right things for the long term. And I didn't hear an organization that was like screaming the consumer's in trouble. I heard we bought a bunch of stuff. We had to pay a lot to get it where we needed it. Everybody's consumption patterns are like shifting in these waves. And now, we were over inventoried and we're doing what we need to do to get the store in the right condition for the next quarter rather than trying not to write down something today. I don't know. I think that all makes sense. It kind of sucks, but there's a lot of choppiness that's COVID related. And if I recall correctly, I don't think that Target broke out the customer segmentation. Walmart said that some of their customers were trading back to private label meats and stuff, which I don't know. That's been kind of like a secular trend. But I think their takeaway was my perception of their takeaway, which is a biased perception, but is that
isn't that just your takeaway?
Well, I don't know. I mean, they're saying something, I'm listening to something, I'm then interpreting it. I don't know. Either way, I think that the lower end consumer that shops at Walmart is being hurt by inflation.
Careful,
and I think
you're going to get kicked off Twitter if you say things like that. That's what killed Rudy.
I don't know. I'll be fine with that if that's what I have to go down for. But But I think that like a lot of their consumers are doing okay, and that some of this was like a lot of inflationary pressure through the system. So, not great when you don't have a huge margin for error and then stuff happens. Not great, Bob.
Not great, Bob.
Not great.
I saw a statistic that 78% of folks have like the $400 could get hit with the $400, one-time expense that they weren't expecting, which is like, that's unusually high, which it's not.
Yeah, people are in good shape. I mean, I think that, well, for now, fast forward a little while, but what was interesting about Walmart is like they said that they were hang on, I got to think about this. They said that they were overstaffed because they were expecting people to be out with COVID. And then there were fewer people that were out with COVID than they expected. So they were sort of like double stacked on their staffing expenses, which, by the way, China, what the fuck are you doing? Stop this zero COVID policy. It's totally junk unless you're just waging economic warfare on us, which is bullshit. And I do not trust it. My tinfoil hat is on. Anyway,
we're definitely demonetized at this point.
I don't care. Google's in China's pocket. I said it. Anyway. The overstaffing, and now you've got like these layoffs coming out of Silicon Valley. Then you get the labor market gets a little more slack in it. Then maybe people don't have as much bargaining power, and then you don't get the wage inflation. And then maybe the Fed doesn't keep hiking because they're really worried about raises or inflation, wage pressures. Then maybe you get them to ease. Then what happens? Like, I don't know. This is an interesting time to play a time arbitrage game. It always is, but everybody said they were really long-term at the top. Let's see.
Yeah, that's a good point. Definitely a lot of long-term at the top.
And one follow-on thought to that is like, I think that the next time that everybody is talking about being so long-term, I think a good like thing to really sit through and think about is like, what has happened in the last 10 years of my life? And am I really getting paid for taking 10 years of duration or 20 or 30? And I don't think like, I think a lot of people made, I mean, look at Charlie and BYD. And I mean, even Charlie got into Never Sell and isn't in Never Sell, right? I mean, so I don't think it's necessarily wrong. I just don't think it's necessarily right. And there's nuance in life.
True that.
Anyway, that's my segment.
One way that I think someone mentioned this in the comments, one way to tame inflation is to get the prime rate. And folks, you just have to remind me what the prime rate is, but get the prime rate over 10 or over inflation. So we're saying inflation's 8%. So that would be 8%. I think the 30-year mortgage rate's now like almost 5.9 last time I looked, 8.67 or something like that.
That's a big run from
January 2021. It was I think it was 2.9%. So on the median house, I've stolen this from somebody's tweet. I'm sorry, this is probably Charlie Bolello actually. Median house price in January 2021 was $430 at a 2.9% rate. Repayments were like, off the top of my head, I think he said it was $1,200 something with the 1,200 handle on a monthly basis. And now the rate is 5.9, and the median house price is something like $530. And so that's a doubling of the monthly repayments to like $2,500, something like that. At some point, that's gonna
but your rent
house prices.
Same roof over your head as it was before.
But what are you gonna do? Like you're gonna go rent? Like rent? All the landlords are bumping rents like crazy.
I don't think anybody sells because they have to.
Yeah,
I think
you're just stuck. You better like where you live.
I think what happens is people lose their jobs and can't afford the payments, and that's how you get the tumble in house price. And I think that's why housing tends to take about a year longer than the stock market to bottom.
But I don't know that you see. I don't know that you really see prices come in as much as you see velocity go down.
Well, they do. Like if you look at any of those long run like the Schiller house price. Like Schiller came down about 40% last time, 2007, 2009. That might be an unusual period. Though. That's fair. That might be an unusual period. But the one before that, like they're few and far between. So the one before that's like 1992. I can't remember exactly, but it might have been half that number. It might have been coming back 20%. Now, I think house prices,
I mean, dude, if you pull up the Fred economic data and you look at the S&P Case-Shiller U.S. National Home Price Index, that is like a one-way slope up.
It doesn't.
X 2006 to 2010, which is like a pretty big EBITDA add back. If you just take away one huge financial crisis that ruined everything, it just goes up.
Here's the thing, though. Everything has round trip. Like if you look at tech stocks, a lot of stuff has round trip. Like it's had this big bulge that when everybody was home speculating with low rates and there was money being pumped out, everything squirted up and everything's sort of coming back down. If it just comes back down to trend, then why wouldn't the same thing happen in real estate? Like I think that's probably likely, right? That it just like it's a year kind of delayed.
I think that the reason is that people don't trade their house like they're cocained out junkies, and they do trade stocks like that, right? I mean, you don't have like momentum algos and pod shops and all kinds of idiots like aping Zillow? Into fucking housing.
You do. You've got Zillow and you've got the SPAC of Chamath's SPAC.
I wonder how Chamath's SPAC portfolio is doing. I bet it's so good right now.
Not great, Bob.
But you can't. You know that house that housing. I forget the name of it now. Bridge Broadpoint, something like that. I've got that wrong, but they were the ones who were like making offers on houses sight unseen. And Zillow found the problem with that people just take the best offer that they can get. So if your errors are always in the same direction.
Adverse selection.
Yeah. I mean, BREIT is a big buyer, I think, of single family homes now. But maybe
Open Door. Was it Open Door? Thanks, fellas.
Yeah. I don't know. Maybe.
Make it up on volume though.
When Open Door first came out, you could go and have a look at what they had. And so I went and had a look at some of the houses, and they were all, the pricing wasn't wrong on the sales side. It was aggressive on the sales side.
I mean, look,
you can't go into there. You need to download the app now. It's not easy to get in there and look at what they've got to sell. I don't know what that's about.
We had a house in Vermont that in 2018, I was told like no one would ever buy. And we sold it for a healthy price in late, I think it was 2021. Yeah, it was 2021 because that's when my grandma came down to Florida. So it was her second home her whole life. And like, I remember my grandfather and his friends sitting around the table and they were just like, good luck selling these homes. And somebody came in and like hit the bid hard. So I mean, whatever. It's a nice piece of property. I hope they like it. But I do.
Because they're going to have to live there a long time.
You ain't lying. So, we'll see. But yeah, I guess I wouldn't be shocked. But like where I live, people are still, I would say what I've seen and anecdotally heard is days on market are increasing a little bit. But if people are sticking to their price, they're still getting it.
From 3 to 4.
Yeah, well, that's part of the problem. Like, there's just no inventory. It's crazy.
It's definitely ticked up a little bit. It started ticking up now.
That's good. I mean, I personally don't really feel like living through another housing. I would argue the last 2 years have been insane. I didn't want that to continue. I don't think that's good for the system.
No, my guess is that we're going to get a little bit of everything. We're going to get a stock market. I mean, this is a guess. We are going to get a stock market crash here. Probably going to get.
We've had it. Crash. The generals just haven't been shot. Like everything else has been destroyed, other than like commodities.
20% is like, so I wouldn't say 20%.
This is fake news. You can't go with the fucking index top line number, man. You got to look at the internals. The internals have been destroyed.
But you can't have a stock market crash until the index crashes. It's not a stock market crash until the index crashes. And that's always the way that it's well and truly, in retrospect, it's always well and truly flagged ahead of time by virtue of the fact that all this other stuff sells off. That's true. The same thing happened in like the early 2000s. That was big tech sell-off followed by the index eventually.
That implies that it's over, I think is what Toby's saying.
Well, I mean, look, it can go a lot lower, but like, I mean, there's some stuff. Then again, you still have like freaking $1 billion frauds out there. So there's a lot of excess around. Yeah. I mean, I don't know, but you know,
just because something's down 90% doesn't necessarily mean it's cheap either. I think that's something that is probably a good thing to keep stapled to your computer at the moment.
When I sold Curate at 6 and everybody was like, it's cheap, I was like, okay, we'll see.
Whoa, bragging on them.
No, it's not what it is. I just think that sometimes your model doesn't actually fully doesn't fully capture. Yeah, I mean, I do think I knew that situation better than most people. So when I was selling and they were buying, I told people, I said, I don't really think this is the time to buy.
So someone asked, what do I think is what do I regard as a real stock market crash? Yeah, I think like a 2000, 2002, 2007, 2009, that's a Megabear. That's a real stock market crash. Everything else in between is just like correction, even 20% to correction. Having said that, I thought 2016, 2018, 2020, I thought they were all the real thing. So don't ask me. I'm going to tell you that it's a real thing.
This is the real thing.
One of these times, Toby.
No, this is the real thing.
I'm going to call 4 of them and get one right. Get the last one right. I'm just going to keep on calling it.
Just make sure you milk that one hard when it does come in.
Yeah, I don't know.
I am holding cash in case Mike Green is correct. Because if people wake up and they start selling the index, I am very excited to see what happens.
Ooh.
And maybe that's wrong. Maybe we rip and, you know, my returns are not as strong as they could have been. But I'm like pretty excited.
It's impossible to know.
Wouldn't it be better express that as some kind of tail risk product?
Yes, this is what I've been thinking about freaking asset allocation and CTAs for like 6 months and didn't do anything and got my face ripped off instead. It was real fun.
The old sucking the thumb maneuver.
So stupid. But asset allocation matters so much more than people talk about, especially people that are obsessed with equities all the time.
That's true. There's really no good way to time the market. Asset allocation is a better response, and that's determined on your age, how much money you got in the market versus how much money you need for other things and so on. It's not really a question of timing the market. It's just a fool's errand.
Well, and like true portfolio construction, right? I mean, I think a lot of people are finding out that they had 8 bets that were really 1 bet.
Yeah, super correlated more than they thought.
Well, that's one of the problems, right?
It might be that everyone just had one big rate bet on.
That's what I was getting there. When you pin rates really, really
low. Might have been one bet for 60-40. One bet to rule them all.
I mean, it turns out that just getting long the 30-year in 1982 was the right answer. That's giving you the best risk-adjusted returns all the way in.
Yeah.
And if you levered
it, is smart.
Yeah.
Now you're talking my language.
Now you're cooking.
But you know that at some point, Lacey Hunt's trade runs out, right? I don't know where Lacey. He can't be like, we're riding the 30-year all the way. Like, we're not riding that wave to the beach, right? That's over. It's time to paddle back out and find something else.
I don't know. I could understand buying it here.
The 30-year, where is it?
Deflation? What's the?
Yeah, I think there's a real possibility for a deflationary bust. I mean, we've over extrapolated every trend since COVID started. The idea that inflation might not be over extrapolated is like not that hard to figure in my head.
I would say we've over extrapolated every trend since we climbed out of the trees.
Yeah, that's fair.
The inflation one is a funny one, right? So there's clearly it's very, very complicated to unpack because you've got genuine supply chain issues, and then you've got some fiscal stimulus that has made people go and pull forward some demand. But then you've also got a whole lot of money printing going on too in the background.
You've actually got a lot of fiscal tightening through the tax receipts, and stuff is being sent back into the government. There's a lot of liquidity coming out of the system. Whether you want to talk about higher rates creates lower debt, which creates like lower aggregate money supply. Whether you want to talk about like tax receipts now going sent into the government, especially on like a rate of change basis from 2021, You've got inflation, which I would argue is a tightening condition. Like there's a lot of tightening.
Energy.
Food. I mean, it's not so bad if you don't have to eat and fill up your car.
or live in a house.
Or live. Yeah, that's right. Other than that, it's fantastic.
You want to give us some veggies, JT, before we get...
Yeah, before we forget.
Get demonetized. And
by the way, if this
conversation
hasn't gotten people depressed, wait until the podcast I just recorded drops in 2 weeks.
Who is it?
Who's it with?
It's with Jem Carsant. It's not exciting. After
Jack
when
Kevorkian.
When it ended, I just said to him, I was like, well, I think I'm going to go get a drink now. Thank you.
That bad, huh?
It's not a happy one.
Oh, okay. Well, that's why they come here, is for all the rosy outlooks. All right. So this week's veggies segment is from this book called Built by this woman engineer whose name is Roma Agrowal. And shout out to friend and fan of the show, George, who sent me this book. So so this is about the London tunnel, and it kind of has this checkered history that is interesting to go through. But so let's rewind. We're back in London, early 1800s, and the only river crossing in all of London over the Thames was the London Bridge. And if you know anything about that, like that was a complete disaster waiting to happen at all times. Like it would catch on fire, it would collapse periodically. It was really slow and expensive to get across. So basically, like the Thames was almost like uncrossable for the most part. So in 1805, this company.
I'm holding my hand up.
That inspired the song.
Yeah, that's what I was going to ask. Was the song because it fell, or was the song because it was so shitty?
No, the song is from because like it was so shitty and it would fall over. Pieces of it would fall over periodically.
So it was always falling. So they created this song.
Yeah, okay. That's what the song came from. Okay, we're done with nursery rhymes. So
it's like my whole education, Jake.
So 1805, this company was established that was to connect these 2 points that were only 365 meters apart. So it seemed promising, like maybe we can span that distance. But it was still impractical to build a bridge of that length at that point with the engineering capabilities, the materials. Plus, that would have blocked a lot of ships that would be moving up and down there that went further upstream. So that was a big issue. So the only remaining option was to create a tunnel under the river, but it was deemed impossible at that point by like every engineer. Like you can't dig a tunnel that far, that deep. It's just undoable. So here's this guy, this engineer named Mark Brunel, and he was sitting at the dockyard, and he was looking at this chunk of removed wood, like a timber out of a ship, from the hull of the ship, and he observed this little worm like working its way through the wood, and the worm had these 2 little sharp horns on its head, and as it would wiggle around, it would basically like kind of gnaw at the wood and turn it into powder, and then it would eat the powder, and then as the powder would go through, it gets mixed with these digestive enzymes, and it would come out as this thin paste behind the worm as it's working through. And when that paste was exposed to air, it would harden, and it would basically like build this, like it was shoring up its own little tunnel. And so, this worm's working really slowly, working its way through here. So Brunel realized like, gosh, I think I could build a machine that would attempt to do something like what this worm is doing. Right. So, we got a little bit of some animal veggies going, which is always fun. But in Brunel's vision of it, this iron worm was going to be like twice as tall as a person. So he gets to building it, and it's basically like this big iron cylinder that's on its side with these blades on the front of it that are churning away at it. And men, because they didn't have like they hadn't harnessed electricity to be able to do this yet in that way, it was men that were just like pushing these blades around to eat at the dirt really slowly, and hydraulic jacks that would inch the cylinder a little bit forward. And then men like clearing the dirt out behind it as it was going. And then like bricklayers would come in behind them and lay bricks around it. So it was basically like recreating how this little worm was doing its thing. So, and Brunel patented this invention, and he called it the shield for some reason. I don't know why. It seems like a dumb name. I definitely would have gone with iron worm or something. So around that time, like financing they found financing to go after this project to go tunnel under the Thames. And in 1823, they found private investors, including the Duke of Wellington, and they created the Thames Tunnel Company. And the project began in 1825, but it was really slow work. It was progressing like 8 to 12 feet a week to try to get through this thing. And many workers, including Brunel himself, they fell ill because basically like the Thames at that time, and I don't know if it's still like this, but it might be, but like it was basically just a sewer. I mean, everything went in there, garbage, waste, bodies, like that was like, you just, whatever you were done with as a human, you threw it in the river. And so like it was seeping in this sewage laden water and like making everyone sick, basically, who was working on this project. And it also would give off methane gas that would like basically like blow up with the lamps, the oil miners, or the lamps from the miners. So, and then the other problem was that they also had periodic flooding to deal with. So like part of the roof that's going under the river would just cave in and just like fill the whole thing up and drown a bunch of guys. And so like at one point, Brunel's son, he lowered himself down in a diving bell, like there was a leak. And so like, I don't know if you guys know what the diving bell is, but it's like, picture like take a cup and like put it underwater and the air stays there and you can get in there basically and like do work. And so like divers would use these. So he's climbs into this diving bell and gets lowered down to the bottom. And then he like from a boat basically, and he's repairing basically the bottom of the river by throwing these bags of clay to basically like cover up the breach that's in the tunnel. I mean, just shenanigans, right? Like just, can you imagine trying to do all this stuff? Like your dad's working on this and he has you like going under, going down to the bottom of
Hold the torch. Hold the torch steady. Get
in there, son. I got a job for you. So the tunnel flooded again in 1828. And eventually these financial issues caught up with the project. And then they like took the passage and walled it off and it sat vacant for 7 years. Nothing was happening. 1834, Brunel raises more money, gets the project going again. More floods occur in 37, 38, 40, and also fires from leaking methane. I mean, many men died. I don't even know if they have an accurate count. Finally, 1841, it's completed, basically like 19 years after the project was started. And it gets fitted out with like lighting and roadways and a spiral staircase. And although like at the time, it was a total triumph of civil engineering, like everyone said that this was impossible. And this guy pulled it off like through this like miraculous perseverance and really ingenuity, like to come up like using nature as a little as a inspiration. But the Thames Tunnel, it was a total financial disaster, right? It ended up only being used by pedestrians. Like there was no real commerce that was going through it. And it became a major tourist attraction, actually, like attracting about 2 million people a year that wanted to just come see this oddity, and they'd pay a little bit of money just to like walk through. And then it became the haunt of prostitutes and tunnel thieves who just lurked under its arches, and they would mug passersby. So like basically like go down there and like, it's like tunnel people living down there that, better be careful when you go down there. So then it gets purchased in 1865 by the East London Railway Company, who's trying to build all the like underground, basically. 1869, they put tracks in there and installed a steam engine that was chugging around. And then later that all got absorbed into the London Underground. And I think what it shows, like that the construction of this was that it was indeed possible to build underwater tunnels now. Like, so it showed that for the rest of the world, like, look what you can do. But, and there was tons of skepticism by every like engineer. And now it functions basically as a museum, and, they'll have like little concerts down there apparently, and like occasionally like bar festivities. But I think to tie this back a little bit, maybe to some things today, we've talked, I think it was season 2, episode 21. We talked about subjective value, and Eugene Bombal works like the bags of grain and like their best use, right? Like, and then that would dictate what the value of it was worth. And so, this tunnel went from being like, God, this is going to like, allow this commerce. It's going to make a ton of money, right? Because the bridge was really expensive. They were charging a lot. So, but it never became that. So there's like your number one thing you thought you were going to make money. That doesn't work. So then it becomes like the next best use becomes like people coming to see it as like an attraction and an oddity, which is not really worth that much. And then it becomes like a place for, prostitutes and thieves to come hang out. And that's probably not really worth that much. But
Could
then
be
it
worth
gets
a lot, actually.
Well, yeah, Rick's, I guess, figure that one out. And then it finally, actually got a bump back up again, kind of in value based on that the underground could run trains through there. So, when we think about all these different assets that we're buying at different points, and we think, what's the next best use of this asset if it's not being put towards what it's currently using, because the world changed. Tangibles, I think, allow some room for that, but I think it's becoming increasingly obvious to me clear that the intangibles world, like there is no second usage, right? So like it is just an absolute cliff when it's not being put to use for what the current use case is. Which just makes it harder to underwrite like a level of value to it, really, like to find an intrinsic value, I think. So anyway, I just find this whole thing fascinating. The other thing too that's interesting is huge engineering success, perseverance, and yet total financial disaster, total arrows in the backs of the pioneers, right? And we have a lot of things right now that, I don't know if this is how you get to 50% GDP per year, like projects like this, but it's possible that there's a lot of absolute amazing engineering successes that become total financial disasters. And just because it's a success and actually gets over the finish line doesn't guarantee that you're going to have a good investment outcome. So just something to think about.
Is Boring Company public yet? Can we?
I wasn't naming names.
I saw something.
Criticized by category.
That's
Toby.
Pretty cool. Why do you think that intangibles only have one way out?
What is a line of code for Facebook worth, if not for running a social network?
I don't know how it can morph, but I think that the ability, I guess if all of social networking went away, then Facebook would probably be gone. Yeah. But like Google could shift a lot in the pandemic. It wasn't necessarily like one thing that it was serving, right?
True.
And I think like I associate like the intangibles tour with the management teams.
Well, how about this? How about this then? Let's talk about like network effects. If your network effect goes the other direction, and
you're fucked.
It's really hard to imagine that it works, that you can get it back, and that you can pivot in some other kind of way. I don't know. I think you're right. I think you said it better than I did.
Yeah, but I think that like the intangibles meeting atoms probably. I mean, it's interesting. Like Berkshire is a good example of intangibles than meeting atoms, right? Through like the insurance operations and their brand, then reinvesting in reality. Google's probably some of the same. Microsoft's some of the same. Amazon's probably some of the same. Yeah.
There's a little bit of nostalgia in brands, like that Shinola, which was a boot polish in World War II, has been turned into a watch company.
Yeah.
Oh, really?
Yeah. Abercrombie was that.
Abercrombie, like a few of those.
I'm interested to see if Levi's comes back. I could see Levi's being kind of cool again. Hey, if Crocs can be cool, why the fuck can't Levi's?
Yeah, Crocs is a shocker. Crocs is in my screens all the time.
And has been off and on for decades.
I remember what it was a net at one point.
Yeah.
I'll tell you a good retail episode. I'm not trying to plug my own stuff today, but like Simeon Siegel, when I had him on, like that's a cool episode. I like the way that guy thinks.
What did he say?
He's just got like, you need to listen to it, but he explained like when he was actively short Peloton, and I think he timed it really well. It had to do with like the inventory buildup and when they added fixed cost into their business. And he talked about like, he's got this study that says DTC isn't all it's cracked up to be. And he did a lot of like, I think the DTC brands peak at like $3 billion in sales. I don't remember what he said wholesale is, but he went back and he tried to figure out what brand, like where do brands peak? And that was it. But Nike's the anomaly. And I said, why? And he was like, I don't know. I haven't figured that out yet.
Well, they're not only DTC though, too. So I don't know if that matters.
Yeah. Yeah, that's probably right. Because they had a lot of wholesale.
Big brand. There's a good comment here from, sorry, I don't want to cut you off. Keep going.
No, I was just thinking about Jake's intangible thing and then like what Disney is going through right now. And man, I'll tell you what, just like the amount of stuff you have to navigate to manage a brand for the long term is just like really, really difficult. I was talking to a buddy about his perception of wokeness and how it's like getting into Disney. And he's the only African-American guy that I know how to like talk to about race relations because we have that kind of relationship. And he was like, I'm telling you right now, if in this Obi-Wan show, they make the black lady like end up helping Obi-Wan, I'm done. He was like, they need to make her badass and Obi-Wan needs to kill her in some horrific way. And like that I will view as equality. And he's like, if it's some like you can't kill her, he's like, I'm done with this stuff. It's just kind of interesting, you know, like managing that.
What happened?
I don't know yet.
Oh, okay.
I haven't watched. But his argument, he was also really mad about Black Widow. He's like, why are all these women badasses and then they're controlled by some old white man? Like, that's messed up. I was like, yeah, that is kind of messed up. But anyway, I digress. And now I've totally derailed the show. Send hate mail to me, folks.
Good comment from Solid Prosperity here. Where he says we're at the, or she says, sorry, I don't know who that is, but we are at the, is this a recession point? In my opinion, recession drawdowns average 44%, 40% excluding the Great Depression. Average in a non-recession is 28%. So the problem with that, of course, is that all of the data is coincident and we don't know whether we're in a recession or not. You kind of find out after the fact.
Also, how big is our N here, really?
Yeah, it's small. Yeah, that's right. It's not statistically significant, but I do think that it's probably a fair point to make that you get these sort of overvaluation corrections where the market's just raced ahead too far and it comes back a little bit just slowly. Or you get these things where there's some real issues underneath where there is a contraction, and that's when you get the big wipeouts. Like the intuition is right, even if it's not statistically supported. What kind do you think we're in now?
I don't think we're in a recession yet. I shout out to the lady listeners, by the way. But I think one of the things that's tough about the recession stuff is like, okay, so we're a recession over 2021 when we flooded the system with money. Like, okay. So
every same company has problems with these comps, right? Like add it all up. And
so you might get a technical recession that's not really a recession. You get
and like what year do you comp to? 2019? Like that was the last year that the world was even close to normal.
It was getting pretty loopy then too. That was, we did get a 10-2 inversion then. We got a 10-3 inversion then too. It actually predicted the COVID crash. Funnily enough.
Right. No way.
Yes, Michelle Markey, you're a lady listener, and I met you in Omaha. I confirmed that you're actually a lady. Sorry, that was a comment.
Yeah. Hello. I think I met her too. It was nice to meet you. I think I saw her at Markel too. Yeah, I don't know.
How's Markel, by the way? We haven't talked about.
I didn't make it inside.
It was good. No,
not that. Toby,
not the Omaha one, the actual meeting. Sure. Yeah, sorry.
Yeah.
No, I think. Look, I think the general take is that quality businesses are priced at a point where you can get like a return again, and it's not like a growthy crowd, but I think. I think that like value in some of the growth names was a takeaway that I had, but it's all a matter of which ones and what you define as. Zoom is interesting right here. Like Zoom is a pretty cheap stock on a peg basis. You got to have confidence in the asset duration, but here we are recording on Zoom and we've tried Teams and I don't particularly like Teams, and I've tried Google Meetings and that kind of sucks. And I don't know. I think Zoom could stick.
Feel the same to me.
Oh, I don't know. Zoom's so easy to use.
I pay for it. So, yep.
But with your wallet,
we haven't had as many technical difficulties since we came over here either. I don't think. I
Yeah,
mean, we have a
probably more
lot, so
stable
they're
than-
hard to forget.
It's probably more stable than Skype, but a lot of
Yeah.
it's related to the computer that I'm running it on. The mouse is down here going as hard as you can. Solo came back. Solo Prosperity says the N is 21. So it's not quite statistically significant, but I still think that the intuition is right.
What do you use there? A T-score?
N, just the number of instances.
Yeah,
I guess.
I know, but when you don't have a full a full sample size, what do you use? I don't think he uses Z-score. Anyway.
No. Yeah, what's the free cash flow yield on Zoom at the moment?
I think it's pretty high. I mean, I don't know how much is stock-based comp, but
They're
I mean,
they're like $3 billion in revs. I thought on like was it 30 billion EV or 25 billion EV, something like that.
I'm not sure if it's that high anymore. Could be. Yeah, 28. Let's see. Sorry.
You got your finger on the pulse of this market. I love it.
There's some interesting stuff out there. I think there's a lot of interesting stuff. Like that's always the difficulty, right? The bear market we're talking about kind of the index, and nobody really cares about what the index does other than just sort of it's just shared pain, which is, at one point all the value guys were crying while all the growth guys were cheering, and then that flipped around. And that's just broad-based pain, I think.
It's pain for everybody.
But there's definitely some stuff that's clearly undervalued.
Yeah. Not hard to imagine the kind of Buffett's analogy of Washington Post in mid-70s when he said everybody knew it was worth, whatever, call it 800 million at least, but nobody wanted to buy it at 200 million for fear that it would go to 100 million on them.
Well, there's a few things out there like US Steel, which I don't own, but I may buy at some point. Like it's like on a one times PE. It's close to a 1 times PE. And
have you talked to Mike about lumber?
Me personally,
I'm just saying. There's a lot of these commodities. Shipping stocks are crazy fucking cheap. If
you can read about like Icahn buying. I forget what it was. It could have been something like that, but it was at like 1 times. I think it was an energy company at 1 times. And the reason is that nobody expects the 1 times to persist. Like it's easy enough to understand. Although 1 times might be too cheap for something like that. 1 times is cheap. I understand you get your money back in 1 year. That's
gotta get it back though.
I'm a nervous investor, but even that seems to me like that's pretty conservative to me.
Yeah. Well, I mean, you should.
If it falls 50%, comes back. Well, yeah, I know a few shipping folks, and that my shipping contact says don't buy the equity, buy the steel.
Yeah, but the equity is outperformed like most of these things. I was the guy that was like, don't buy cheap cyclicals, and that was pretty wrong. But eventually it will be right. But that may be 5 years from now, and people that did it may be really rich.
Berkowitz finally diversifying away from Joe to Citi and other cheap stuff, mostly materials and energy. Berkowitz is back.
Burke. Boy, what have you done for me lately? Morningstar manager of the decade. And then
somebody pitched me on Seritage. Could be worth looking at. I don't know. I haven't looked. So you're welcome for that hot analysis. I don't know. It looks like Zoom's real free cash flow is like $1 billion. So it's not like that cheap anymore, but oh well.
But if you liked it at 500, gotta love it today.
Do you like what's the I guess the question for Zoom is how moaty is it? I don't know. Does it have those network effects? If everybody gets on
Zoom?
everybody, yeah.
Their strategy reminded me a lot of like Henry Schein, and I don't disagree that it feels like it's much easier to switch. But they like Kevin Zatlugel, he reached out to me in the beginning of the pandemic, and he said that like they just got into schools, right, and they were where everybody was learning on Zoom. And if you start to adopt people's behavior, like I could see you remaining culturally relevant. They don't need 100% market share. Like that's not what you need to have that work. I don't know.
But then everybody's trying to get inside that, right? So, it's Teams, everything everybody wants to do Teams these days. I have Google stuff, so I don't mind using the Google stuff. But Teams has become, I've noticed that Teams is becoming, everybody wants to jump on Teams these days.
Yeah.
Really?
I mean, look, I don't own the stock for a reason, but I could see why people would buy it here.
Might work.
Yeah. It'll work a lot better than it did at 400.
What are you looking for a bottom here? I think everybody's trying to call it, but
I'm looking for people to stop asking when the bottom's in.
That's why I'm trying to keep it going.
So annoying. It's like I'm looking for spaces at FinTwit to be like,
just post.
I've lost everything. What do I do to get stuff back? I'm not looking for everybody to keep being like, so when are we going back to highs? Like, no, I want people to talk about we're not going back to highs for 10 years. And I want that to be conventional wisdom.
That's what capitulation looks like. This isn't it.
Every fucking bounce. Oh, we bottomed. No, we haven't. Shut up.
It does take that sort of like that 2007, 2009, like the 14 bounces or the 17 bounces or whatever, 17 lower lows. That's the thing that really gets it out of you.
I mean, I definitely miss this, but I think I've listened to enough people that got it right to kind of understand. I mean, somebody said it to me, the Shrubbery Stagflation Capital on the Twitter machine said it. At least he's who is in my head. It was just like, the hardest thing to do in a bear market is not buy.
I think you want to be buying all the way down, don't you? Because you just never know.
Then you run out of powder.
But it could be, here's the thing, right? It could be 2016, could be 2018, could be 2020.
It's not. I was crying when I was crying and talking about macro being so hard. This is not 2016 and 2018. No fucking way. This is way harder.
They looked pretty real at the time, though. Here's the thing.
No, they did not. Not like this.
I thought they were pretty real.
Do you have a journal entry we can read about it?
Dude, food wasn't ripping people's faces off in their pocket. And oil, even though it's still only like $110 to fill up your car. My buddy that works in oil or gas blending, he's like, we're going higher. Like this is not, it's not that expensive yet. This is different. Anyone that thinks it's not different, I think, isn't paying attention.
I don't disagree with you, but I just think you got to keep on considering all the other possibilities all the time. And you got to keep on considering that if you're considering those other things, and you got to be betting a little bit that way too. You got to be assuming that this is not the, we don't know. At any point, this could be we could bounce. I personally don't think it's over until the index is cheap on a cape basis. I'm just like, I know all the problems with that, but that's how I feel. It is a long way from here. I forget on the index, it was like the last time I looked, it's like 2000 something. Like it's a number that would scare people if I said it out loud, but it's something like that. It's like 2,200 something.
Yeah, I think we bottom when people stop citing trailing multiples and saying things are cheap, and they realize that the multiple is saying that your previous earnings are way too high.
Yeah.
Like I don't know that you're bottoming with Apple around $2 trillion or whatever it's at. It's still like a decent way to go down from 2 trillion.
The thing is, those big ones that have never really got they never got really, really egregious. They get expensive every now and again, but they've all grown pretty consistently. Yeah. When pins had a bad print yesterday, I noticed that Facebook and Google and everything else sold off in tandem with it. So clearly Snaps. Everybody thought it was predicting that in the advertising-based company is going to have a bad time through here, which is probably true.
Yeah, I mean, I still own them. I'm not going to sell them, but I just, I'm expecting to get punched in the face.
Grantham said 2.5, so 2,500 on the SPY. That's about what I calculated it to be. That's fair value on a that's the long run. That's Cape at 16, 17 on the last 10 years of earnings. That's where the number is. Whether that's realistic or not, I don't know. With interest rates where they are, I got no idea. Cape doesn't seem to have worked very well since it was invented in 1996, but that's what it says.
But before that, it looked great.
I don't think it's ever really worked.
I really do think there's too much bottom calling to be a bottom. Like, I think that bear markets exist to grind people down to get to the point where they're just like devastated, and just, we're not there yet. Like, I got rumors from the FinTwit conference. People are not depressed.
It takes a little while. I reckon
it takes a lot of bounces that people want to buy into, that then they're down 20% and they're like, God, this sucks.
The Ken
I'm gonna
Fisher,
buy that neck dip for sure. Can't wait.
The Ken Fisher 1/3, 2/3. 2/3 of the 1/3 of the move takes 2/3 of the time. 2/3 of the move takes 1/3 of the time. I think that's about right.
So we're on the first. Where are we at on that?
I'm guessing, but I think we're coming to the end of the first 2/3 of time, and we're about to see the last third and 2/3 of the action.
That would be my bias too.
Coming up,
that puts you soon. At over 50%, wouldn't it? Drawdown.
That's roughly my number. I think that's the number.
I think you got to own real companies that can buy back shares. Like, you can't. I think if you own Air, you're screwed. And we'll find out who owns them and who doesn't. I may own Air. That would suck.
You're going to have a little bit of everything. All right, dudes. That's time. We made it. Thanks, amigos. Good seeing everybody. We'll be back
Indeed
next week. Same bet channel.
Cheers.